Greetings, beloveds. I greet you in the love light of the one infinite creator. Going into the weekend of March 24th and 25th. Let's take a look at markets here. We have about 1 hour to go before the end of this session. Of course, Friday session here, that is where your markets are trading. And I'll discuss why it would make sense that we close a little bit lower based on the Dow charts. But we'll talk about that in a minute. You can see BTC did touch 112,000 this week, so making an all-time intraday high, but it's a little bit off, trading at about just under 109,000. All right, let's take a look at the summary for the week, and we can see here for the week that markets are generally down about 2%, almost uniformly down about 2%, and BTC as of right now is up about 2% as well. Let's take a look at those charts. Now, we're going to begin with the S&P 500 5-minute chart because as you can see, we gapped down on Friday's session here. We've come back off the lows, and so we can see that one of the reasons why we are stalling around here on the 5-minute is if you take a look at where the RSI line connecting the tops is meeting right there, you can see that it makes sense that if we end up staying below the line, that we close the week a little bit off where we are trading right now. All right, so that's what the 5-minute is telling us for the S&P 500. Now, if you take a look at the hourly, let's take a look at the hourly for the SPX. As this is the 2 hour. Let's go to the hourly here, change a few parameters, see whether we can get that. Change it to the hourly. All right. So we can see this is the hourly, and I bet you a lot of traders are watching this trend line here because it's very obvious. It connects the intraday lows here from early April, touches that level there, and as of right now, the lows of the week, we are touching that line. So I'm sure it's giving people reasons to either stay long as long as this line is holding. And if this line was to break, when it breaks, anticipate there to be some type of a reactionary sell-off, which might in the end of the day mean nothing. But that's the look. Now, as far as the coming off the lows, there's also something else to consider. And we can take this line here. We can even take it here, but let's take it here because it makes more sense. So we move out of this range from there. So this RSI movement brings us off these lows, and then we draw a line from there. So I think one of the things that's happening here in the last couple of days is we've been coming back and we've tested this line. So from a 5-minute standpoint, there's good evidence here that as long as this is holding, that we're going to start building to the upside. And of course, if we get the 2 breaks, either this RSI break, number 1, price break, number 2, watch out, because the market is definitely going to have to probe lower prices. Now, if you got a chance to consider my analysis from last weekend, you remember very well I was talking about my thinking that this was going to be a difficult area for the market to clear based on the simple line. Say this is a Nasdaq 2-year weekly, so I was drawing this line, and the key for me was that the lines were intersecting where we closed last weekend, and I was trying to explain why I think there has to be some type of a pullback here. Now, that's already taking place. So now the question now, as the market is always asking questions of our own analysis, are we going to see a continued push, or is this all we get and we are sideways here and then we break out? Now, of course, we don't know. Now, one thing we can do is we can also use this RSI 50 understanding. So as long as the Dow is above 50, then we can say that we are generally sideways here. But if the Dow was to, excuse me, the Nasdaq, if the Nasdaq was to drop below RSI 50 on the weekly, then there's going to be another weekly down leg. And remember, as you drop below 50, you tend to have a huge reaction to the downside. And vice versa. Above 50, big reaction higher. Below 50, big reaction to the downside. Hope I said that right. Above 50, big move. Below 50, big move. in the direction of the movement. Below 50 here, big drops. And at the same time, above 50, like we did, let's say here, you get big movements there. You can't see it, but that's the case. Also, I talked about the Nasdaq coming back to test these lows here, and that is still playing out. So there's these lows here, which gave us the break, and now that break standing to resistance. That level for the Nasdaq is 19161.63. So for there to be another bullish run, we need to take out that space and move higher. But the more it's looking like, as of right now, given the data in front of us, this is a market that is now preparing to be sideways to lower. On the weekly for the Dow is the one that is dropping below RSI 50. So that tells me that there's a good likelihood we don't bounce in the next hour as we close out the week. In fact, it would make more sense if we drift towards the session lows for this week, because we need to honor that movement below RSI 50. So that's the consideration there for the Dow. Remember, we talked about the Dow. There's this topside resistance that it's come and tagged. So there's a lot going on here, but I talked about this last week, and there's this line that needs to be clear to the upside. There's a backtest line. We saw this in many charts, so no surprise. And also we saw that it was coinciding with the recent break. So all of these things were preparing us for this week, that there was going to be some type of a resistance and a pullback. Now the question is, what kind of a pullback? In fact, if you take a look at the Dow and you go back, let's go back about 5 years, I believe. All right, so this Dow weekly chart is what I used also, and I was drawing this previous resistance line. I was drawing it that way, and you see what I was getting at here is, in this period, generally in this period, we are using the red line for support. This period here was where the red line was being used for support. Now, as of this instant, it is acting as resistance. So you can see that this is also another line that we can track over time, because we need to be above this line if the Dow is to clear the recent weekly closing level and move higher. So again, even this weekly chart does suggest that this is a market that could run into trouble, has run into trouble, some strong resistance, and now it's up to the market to show that it has some muscle to clear all of these resistance lines. So again, we can say that the Dow and the markets have been acting with the bias to the downside this week, as the Dow is moving its RSI below 50. We need to see the Dow back above 50 so we can know that this bad taste of a drop has left the market. So the Dow below 50. S&P 500 is approaching that level, just at about 53. So understand that if next week we drop the S&P 500 below 50, expect there to be another weekly down movement, with the market having the higher odds of closing towards session lows for the week. This S&P 500 weekly chart. And also here, and I know this is, by now you're tired of seeing this, but I need to show this over and over. S&P 500 has this weekly topside line. It has this also where it broke down recently, coming off the highs. All of these things are coming in play, and you can see how they are giving us this resistance for this week. Ultimately, we would need to be above this level. We would need to clear this range where we closed last week, so the market has an opportunity of moving higher. Now, the one thing that is still holding the market together is the fact that the monthly charts are good. And so this is a big analysis point here, that the fact that we are above this line, or we are holding support, is a breakout here, which you can see there's also coinciding with a price breakout late 2023. We've come all the way back and we are finding support here. So as long as we're above this line, then we anticipate month to month, not day to day, that month to month we are still going to go higher, and more than likely test this all-time monthly closing high and potentially improve on it. Now, going into the new month, whenever we get to the new month, should we break this line, then boy oh boy, watch out. We're going to take out the lows of April for sure, or at least test them. So the monthly charts, in my opinion, still look good. Now, last weekend I was talking about the ETF that I used to track the AI space, and I was talking about that it was coming to resistance. But then again, everything was coming to resistance last week. We got this top side line, and then we got this bottom side line that I had drawn, and they were intersecting exactly where we closed last week. So resistance made sense. Okay, we got that. Now the question is, are we going to eventually drop below 50 for a big down week in the AI space? We shall see. But what is encouraging, and that's why I'm including this chart in this analysis for this weekend, is I do like what I see here. We have what seems to me to be flattening out moving averages here, and that moving average is the, I believe that's the 200-day. It's flattening out. We have an upward sloping 50-day moving average here, so it looks good to me as a nice base. What we need to do is clear this area to the upside, and if we do, when we do, then that's going to be indication that the market is now set to test all-time highs and potentially improve on those all-time highs. In other words, what I'm saying here is it seems to me that this is forming a nice base, but we need to clear this top side area, this daily closing high recently recorded in May. We need to clear that so we can now bring another equation into the market, which is a market that is going to have an appetite to attack the prior all-time highs. Now, one thing I failed to mention, and I'll mention it here, actually let me go back, is I should have mentioned the daily charts for the Nasdaq and the S&P 500. Why? Because they do have some type of a hope line. It's this breakout line on the daily that is still intact. We had moved above it here, and we haven't broken below it yet. So this could also be the market coming back and testing this line. If it starts coiling higher day to day, then that's good. In other words, also we need to see a breakout above this range. May highs needs to be taken out on a daily closing basis so the market can attract more institutional buying. And same thing with the S&P 500. I'm just repeating myself here, so I'll go back quickly. Again, the top side breakout line continues to be intact, and as long as that's the case, then we can anticipate a market here that over time should start coiling to the upside. So this line remains intact on the daily. Again, where we break out here, we begin this move, and if we coil up here day to day, then we're going to be sideways to high. If we end up going below the line, then of course it means that we are still in a continued move lower, and maybe the weekly charts would have dropped below 50 for the S&P 500. Vanguard VT ETF that tracks global markets, you can see here, this is now looking like a failed breakout for now. And again, just going to draw the lines quickly. There's this top side line. Well, I guess I can draw it that way. Let me see how I drew that. I believe draw it from there. You got the top side line. You got this break point being tested, and you had the prior backtest line. I'm going through this quickly because we know the lines, these lines here. All of these are resistance levels. So as long as we are below those two lines, then of course things are still pointing to be sideways to lower. To fix this, global markets as a group would have to clear these lines to the upside. Last week, the Canadian market closed at a fresh all-time intraday, all-time weekly closing high. This week it made an all-time intraday high, but we are still contending with potential resistance in this area here, and that's an issue for this market, this area here. It also happens to be, as I discussed last weekend, same place where we have this backtest line here. So just like we see with US markets, to correct this, Canadian market needs to eventually clear these two lines and needs to be sideways here and break out again. But at least it gave us the understanding that markets could eventually go back to new highs. It opens the door for that possibility. Now, if we take a look at the dollar's had a big down week, as you can see here, but I'm not sure it's the worst thing for the dollar, in my opinion, because of the monthly charts. And I've talked about this before. What I see here, as far as I can tell, is that the dollar is basically coming back to test this breakout level here. This move here, after it broke out, had a nice run in the dollar. And so that is my understanding that the uniformity concept is coming in play. And you can see month to month, as long as we end up holding this line, then the big swing trade is not lower for the dollar, but actually for a bounce to the upside. And in fact, if we go back even further for the dollar, there's not only that level, so there's that level, so there's this level here about RSI just above 38.2. And then there's also another line that I see based on the prior lows from 08, if I draw it that way. So I think month to month, the fact that the lines are intersecting where the RSI is trading tells me that this is an area I should anticipate a rebound for the dollar, which might affect commodity prices. Speaking of commodities, in a way, URA, uranium related stocks, and ETF. So this is a URA which tracks the uranium space, the ETF. I see a couple of issues here that I'm going to explain here. We got this possibility of a topside line. One can say there's a breakout here. So that looks good. But first, maybe what I should do is, my issue with this uranium space is the monthly. So we are coming back and effectively taking out these monthly closing highs. So of course, it makes me look for a breakout situation. The issue here is we've come from so deep and now immediately attacking the previous close. This is not the look you want. Additionally, take a look at where your RSI is. It's not at 3-year highs, and neither is the RSI close to 69.1. So that's one issue there. And if you take a look at the MACDs, you can see the issue I have with this breakout attempt is the fact that the MACDs are not about to break out. So I have a lot of suspicion that this breakout, in my opinion, as of right now, is suspect. It could eventually fix some of these issues. In other words, it could go sideways, maybe on the weekly time frame, and eventually the next breakout is going to fix some of these issues with the RSI and MACDs. But for now, what I'm saying here is the uranium space looks very suspect to me for a reversal. Take a look at this monthly chart. If you connect the tops recently, you can see that the monthly RSI is coming back to test this topside declining line. And then now if I go back to my weekly chart, I can also see that this is where we break down here. So this break is this level here. And of course, excuse me, we went down. And so that level is being tested. If I just draw the line right there. So it won't surprise me that this also becomes some type of a reversal trap zone. And the next meaningful week to week direction for the uranium space is down. That's my thinking. Another way, and I know this is overkill, but let's just do it, is there's this break point of those highs there. So we break this trend line there, draw a line from there. You'll see that this has been used before for resistance for these tops. And now we are going to ask a question as to whether we can clear that level. And then there's also another line. If you draw it from the lows here, this is a weekly chart going back to 2020. You can see that. Let me remove that. And I know this is probably won't make sense, but there's also this line here. And what this line gives us is, as far as I can see, we break the line here, I believe there. We come and we are rejected again for these tops. We try to move above the line here, but we are rejected with uniform activity for the tops there, rejection there for those tops. And now we are back to test the same level. So if we end up getting rejection here, of course, that means that week to week, the next meaningful direction is down. But even on this weekly chart, you can see the problem with this is not a good base. You always want to see some type of a sideways action before a good breakout, which means that the stock has had time to digest and decide, make a good decision and based on a good foundation for the next leg up. But this one is what we call a V-type formation. Not good and not very stable, which brings me to GLD. Now remember, GLD, I've had no issues with GLD because I know the strength of it. We know the strength of GLD. It's been above 69.1 since, let's call it, around the same time last year. So over the last year, this has been a strong instrument. And this week we are seeing a fresh breakout. And so now going forward, it needs to hold above that prior weekly closing high. So that level there that I gave you for GLD is if GLD can hold above 297.98, that's a fresh breakout, and that's good. And that is similar to the gold index itself. So the index would have to hold its prior weekly closing high at 33,237.26. So right now, with the RSI back above 69.1 on the weekly, you allow this to have room to move higher. Of course, if the breakout fails, week to week. That breakout fails, that's a red flag. If this RSI is rejected here at 69.1, that's another red flag. But for now, if the breakout is doing the best it can as to setting up for the next move higher. And the daily recently used the 50-day moving average, it held. It used the 50-day moving average here in the last week or so, and it held. So I mean, a lot of things are going well for GLD. There's this level here. Again, even this one was another area for anybody who's looking to time this for a rebound on a short time frame. So there's this RSI movement here. It's been used before here for the lows there again. And here double bottom for the lows there. So we can see that GLD holding above the 50-day moving average just means that the momentum still remains sideways to higher for GLD. Now I have to say, because I mentioned this, they looked like we were broken. Now this looked like it had, there was this close here, and then there was a breakout attempt. So there's a lot of things that were going wrong for GLD as of end of last week. There was a failed breakout that I discussed last weekend. It failed there to break out on the daily, and then there's this low point that it had broken below. It had broken below this low point as of last week, but you can see it's come back and recaptured that level, which means it has fixed the issue that the chart looked broken, but now that it is above that level, we have to say it has fixed that issue, and so we are now in a sideways to higher GLD phase. Now, which of course we have to look at the mining stocks as a group, and we can see there's a fresh breakout attempt, not yet confirmed, but looks like the setup is good enough for GDX to move above the prior weekly closing high. Hasn't done so, but close enough. And remember, the monthly RSI is also newly above 69.1, so it's moved above that level here in the last month or so. So it needs to hold above 69.1 on the monthly if GLD is to enjoy a sideways to higher market as far as those mining stocks are concerned. Now, so of course you should have an interest in mining stocks, and I have a list of candidates. I just haven't sent them out as the market's been a little bit complicated this week, even though we know that the market looked like it wanted to pull back. Take a look here at SLV, and you can see that it needs to break out if it's going to attract institutional eyes and buyers. Hasn't done so, but could eventually break out. As of right now, I say it's just sideways, not the worst, but also not breaking out. So really can't go believing that it's going to have a big run until it gives us signs of a true breakout. Take a look at XLE, and we're going to go to the monthly chart because that's the one I've been using to explain why I think XLE is holding. Now, of course, it's down this week with the market, but also remember there's this previous support line, and I won't go into detail, but this is a line that we've been using for potential identifying this as a rebound area. So that's what it looks like to me, that the fact that it is gonna hold that level. Now on the daily, we can see that there's, just as we see with the general market, there's the top side line here on the daily that is an issue. So for now, the monthly is giving us support for a bounce higher. The dailies are giving us resistance. So that's the case. We might explain why we're gonna be sideways to down here until such a time as we clear above this top side daily resistance line. Now this is also true. Take a look at USO, which I use to track crude oil. And here we can see something similar in a sense. It is the fact that we have this top side line that this week was resistance here. So until we clear this line to the upside, I would say that, and also trading below the downward sloping 50-day moving average, as long as we are below the 50-day moving average, which is slanting lower, then net result is we anticipate lower prices, sideways to lower prices. To fix this, then we would have to clear this resistance line on the daily, and the prices would have to move above the 50-day moving average. Keep in mind again here, the long-term view is that we anticipate this to be where we find support for crude oil based on this prior line. So this line has been very good in giving us directional bias. Once we break out here, we have bias to the upside, and since 2022 the monthly chart's been finding support during pullbacks on this area, and we came back this month and we found support. So crude oil month to month is stabilizing, day to day pulling back, and that's also the view for the general market, which now brings me to BTC. And BTC is, again, we touched all-time highs this week, just under 112,000. So a nice move this week. We still have that price breakout taking place, so it still looks good. Now remember, one of the issues I discussed last weekend is this fact that we had 1, 2, 3, 4, 5, 6. Now we are working on the 7th positive weekly gain, and I feel that to be aligned with the general market, we are also coming back to test this level here, and I think this level here could also be where BTC has to clear this line and stay above it. Otherwise, if it is eventually where it rolls over, and especially if prices drop below the prior weekly closing high, talking about the prior weekly closing high from late 2024, you get those two things, price failure to break out, RSI stalling around here, then BTC sets the stage for a meaningful move lower. But if the RSI can continue doing what it's doing, is grinding it and moving above this line, and prices hold around here, then we might see BTC continuing to act very well. On the daily for BTC, one of the reasons why it won't surprise me that BTC has to make a new fresh all-time high is because the RSI held above 69.1 for a good part of the month of May. So that tells me there's a lot of bent up demand for BTC, and that it would make more sense if we end up making fresh highs for BTC in the short term because of the strength of the RSI. Now take a look at the 4-hourly. So let's do that. So let's take a look at the 4-hourly for BTC. And what I see here is one of the issues why it's pulling back. We got a very simple topside line that is now giving BTC this pullback look on the daily. We tagged this twice, and we also have support when it comes to the bottom side. So you can see we are within this wedge formation, and I think movement either above gives us good indication to expect prices to go higher, and movement below this wedge, a break of this wedge, means that we are gonna go lower as of short-term swing trade direction. So that wedge has yet to resolve. We'll see which way it decides to go. But now remember, on a monthly chart, the key is that BTC monthly continues to break out, and that level that is breaking out was at about 103,000, depending on whatever exchange, 103K, and it is this monthly closing high from January. So as long as we're above that price range, then BTC could actually be already giving us a major buy signal. You can use this as a buy signal for BTC as long as it is above the 103 level. This is a buy signal. You can continue holding BTC as long as the monthly RSI continues to hold above 69.1. Price breakout, RSI above 69.1. Those are potent mixtures. Don't forget that the MACDs are essentially at 3-year highs, if not all-time highs. So the minimum requirements are met on the monthly. One needs to be open to the possibility that BTC has already given us a major buy signal, and this thing is going to explode in the upcoming months. I can see BTC going beyond the 200K, 300K price mark here in the coming years, if not months. So with about 20 minutes plus before the end of the session, this is how your markets are trading. And that's it for now. I leave you as I found you, in the love and in the light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.